My name is Michael. I am the president and co-founder. There's two of us here at backtothefuturetrading.com. 17 years ago, we sat down and decided if 90% of people were losing 90% of their funds in the first 90 days they started trading, like we were, there had to be something we were missing. And we concluded that for all intents and purposes, that markets were probably rigged, because the only other place in our organized, lawful society that people were losing time was inside of a casino. And so we started to see that casinos and banks operated along the same premises, which is the house always wins. And so we did further digging and realized casinos have something called programmed randomness. There's a small element of randomness in every game that you play, but if you play the game long enough, the house always wins. And so when we started looking deeper and deeper into this, we realized that the things we were being told that were the elements of success, if you study candle patterns, if you study price action, if you journal every day, if you look at a 3-point trend line and watch for trend line breaks and moving average crossovers and everything under the sun, now it's fair value gaps and this type of fair value gap and TPO charts and market profile. We tried all those things. Renko bars and range bars and line break bars and Mr. Miyagi bars, karaoke bars, everything you could think of I've studied. And nearly all of them are open to interpretation. They're open to 100 types of analyses by 100 different people, and left unsupervised, unchaperoned, everyone will basically stop using it in a short period of time. And that's a discouraging place to be. And so we started looking at markets differently. What if the movements in the markets were pre-planned? What if the movements in the market were pre-planned? What if they had a playbook they were going to follow before everything started? So like on this chart, for example, what a program to look for all the times during the trading days that the market actually fell in the last 10,000 bars. And what if we looked at all of the times the market went up and put in these hooks or pivots in the last 10,000 bars? Were there any times that these things were lately consistently happening? Meaning, were there times where markets were rising more often than not? And were there times when markets were falling more often than not? There was nothing available to us programmatically to study that. There was nothing available. This was nearly 20 years ago. And so somebody taught me once to pay attention to the things, the question being asked. One of the things in the news right now is the Jeffrey Epstein scandal. How many of you have been kind of following that crazy nonsense over the last few years? And I listened to one podcast and the gentleman said, how come none of the reporters ever investigated whether Epstein was related to any type of intelligence agency, garnering or harvesting intelligence from ranking high profile scientists and technologists and politicians. He said it was curious to him that no one was asking that question. No one was asking, where did his money come from? Because no one on Wall Street, no one in the Forex trading circles had ever heard of any big trades this fund had placed. And yet there were hundreds of millions of dollars whose origin was unaccounted for. And so I've always sort of had that mentality of what questions aren't people asking, what things aren't available to traders. And lo and behold, when we started looking for those answers, they were there. There were behavior patterns that were repeating, maybe not 100% of the time or 80 or 70, but 60 to 70% of the time. If we found a time, for example, in this chart, the program is noticing that, hey, 5:30 in the morning Eastern time for crude futures. This was back when we were up around $100 a barrel back in 2022, showing my age there. If we know that 5:30 has a tendency for the markets to rise, then if we wait for 5:30 tomorrow and the next day and the next day, we could maybe have a small amount of risk to see if the price is going to go up again tomorrow at 5:30. Does that make sense? If there is a behavior pattern, if there is a time where they're trying to sneak the ball out of the field and do squirrely stuff with it, then we can wait for that time in the future with relatively low risk and see if they're going to do it again. This, of course, presumes that games are rigged. And so what you're part of today is really kind of cool, because we were analyzing data and looking for these intelligent patterns long before Grok and Gemini and Claude and ChatGPT. We were searching and scanning through thousands of historical bars 2 decades ago and finding patterns that were, for all, again, intents and purposes, hidden to the naked eye. So what we're doing here today is we're sort of going back in time. And I have a web page. If you don't have the link for it, I'll paste it into the chat box so you can follow along. That we pre-populate 3 or 4 days before the webinar when I hold it on Thursdays. It's every other week now. And so you'll notice here, thanks for participating in our test. Below, you'll find market forecasts posted for Wednesday, February 4th, and Thursday, February 5th. Everybody see that? Okay. Now, as you scroll down, let's go to Thursday. That's today, right? I'm going to open up the E-mini S&P chart for today. And it says added 4 days ago, meaning all of these blue and white and gray and black pixels were uploaded to Screencast 4 days ago. In fact, you'll even see the published date right here. The 8 p.m. and 59 minutes on February 1st, this screenshot, this prediction map was uploaded. So what does this mean? What did the computer find, and was it relevant after the fact? And what we'll find here today is actually, I think, pretty compelling. All of the times that we see denoted by a blue line, those were hits. Those were hits behaviorally. The computer said, aha, there are times lately in the E-mini S&P on a 5-minute chart, right? We're looking at a 5-minute time frame. They'll be different for, say, a 60-minute time frame or a daily time frame, or even a 1-minute chart, because the moves are smaller and more frequent. It's saying, look, I went back thousands of historical bars, And I noticed a propensity for these times to be sell-off points. It's kind of like knowing in advance what time of day to pull the handle of a slot machine. Maybe we learned through sitting with a camera in the casino that the market or the slot machine in this example pays off at 9:15 and 12:50 and 2:15. And so we should sit down in front of that slot machine at 9:14 and put a quarter in before we pull the handle. Well, vice versa. All of these times on the bottom came back as a hit. The program found a tendency more often than not lately for the price to go up at 5:30 and 7:05 and 7:55 and 11:05 and 1:30 and 3:20 for Thursdays today. But we had that information on Monday. Do you understand how crazy this endeavor, this experiment of ours is? All of this information was published for Thursday 4 days ago. Because Thursday after Thursday after Thursday lately, this is what almost always happens. Now, it sounds great when I say it out loud. Where does the rubber really meet the road, though? The rubber meets the road when we look and see what actually happened. And we're going to look at that in 1 second. I'm going to keep this chart. We're going to come back and look at it. But if you were with me in my last webinar 2 weeks ago, how many of you were here for my last webinar? Raise your hands real quick or just say yes. Or if you follow any of our social media, Facebook, Instagram, YouTube, TikTok, you'll remember that we've been tracking gold futures now for a year. And at every webinar, I share the dates and directions of the movements in the future. I told everyone who attends our Thursday webinar about the August 18th move, for example. I told everyone in the webinar about the rising gold September 24th in advance, October 27th in advance, December 4th, December 31st in advance. Okay? I told everyone to look for selling on October 14th, look for selling on November 12th, look for selling between December 18th and December 31st. And Lionel, you remember what I said? I said the price of gold was going to go up and then drop. What day? January 28th. How many of you paid attention to that? How many of you took advantage of it? I told everyone, get the hell out of gold right here. That was a $977 move. Bill Ackerman says, I bought a put on gold on the 28th. Thank you. Bill, I'll send you my email address for my PayPal account. It's only a 5% finder's fee. I have no pride anymore. I expect tributes from all of my students. But when we look here, we can see we knew all of those dates and times in advance. We have them on the chart right here, which is pretty cool. I've also been sharing on socials the dates and times for Bitcoin. And everyone was surprised at Bitcoin. And I shared my thoughts with everybody here last webinar. And I basically said, look, we had this surge up on January 13th, and it was starting to trickle down. And it was much different from the signal on December 17th. It was much different from the signal on November 20th. It was much different from the signal on October 23rd and the signal on September 26th, as well as the signal on August 29th. The next buy signal is 4 days, 7 hours, 42 minutes, and 37 seconds from now. You can see it waiting for us right here. And I told everyone, boy, none of the institutions, aside from that stop run right here, where everyone thought that high was being violated and we were going to continue up and go higher. I said, it keeps trickling down and trickling down. And I warned everyone, this is the day of destruction. The next move down is coming, is coming. And you can see these waves, these pushes down. There's 4 more days of carnage. And we already have the dates, the next buys and sells, 1, 2, 3, 4 signals in the future. This takes us out to March 21st. I've shown you on other charts too, signals that were predicted, and I've been a long time predictor of markets like Tesla. And I warned everyone that we were going down in Tesla last time we were together. I said, look, we opened and they kept dinking around below that opening price. And I said, be careful, Tesla is about to drop. And I gave everybody the date for, again, this January 29th. Well, how long is it going to drop for? Look at where they're going. They're going to take this stop out by 4 days from now. And they'll convince everyone that there's a brand new low right before Elon Musk announces that every time he makes a bowel movement, it comes out in 24-karat gold blocks, which he'll be putting into the Tesla safe at the end of every night. And then the stocks will surge. Or his robot now sings karaoke songs, and everyone can have full self karaoke with their Optimus robot. These are pre-planned moves, right? We've looked at these other markets. NVIDIA was one that we tracked, and I showed you the same signals on NVIDIA. I've been telling everyone about these dates and times, and I warned everyone, look for the buy move on the 13th of January, look for the sell move on the 29th. Same thing happened on the 2nd of January, and the same thing happened on the 4th of December, and the same thing happened on the the 5th of November. And they're doing the same thing with NVIDIA that they did with Tesla. They're going to come, break a brand new low right before the next buy signal. This is called the stop run. I don't have an XRP feed. Otherwise, I would put it up there. I'm so sorry. Yeah, I don't have an XRP feed on this data stream right now. Otherwise, I'd take a look for it. Yeah, no problem. So we're kind of seeing that on large time scales, it's working really well. But what we really want to know and understand is what I mentioned a few minutes ago. Intraday, that's where it gets tricky. And so what we're going to do real quick is put the signals up here and take a look at what happened 4 days after we posted the time map, a map that you can have if you own the software. Okay, so now just for authenticity's sake, I'm just going to circle a few things. 725, 725, 915, 915, 1250, 1250, 215, 215. Can everybody see that? 530, 530. Oh, 530 is over here. Sorry, 755 and 755. So there's a problem here. There's a problem for the people that in my advertisements, my social media posts continue to lead the fraudulent charge against me. Fraud! This is a 120 period EMA. There is nothing magical about it. It's just the one that we've been using for almost 20 years, and it just works. It's good at detecting trend, and it actually has nice rejection when the market comes up to it, and you see how it bounces away when it gets near it or touches it. We've just found that it's one of those sort of self-fulfilling prophecies. People pay attention to it, but it's not magical. So again, yeah, looking for perfect. We're not looking for perfect because we can't hit perfect. But what we are looking for is whether or not there was a play, whether or not these plays were followed or not. And so I just want to encourage your eye to follow along with me and see, were the institutions selling from 725 until 755? Right? That was what was published days ago. Did the buying come in and the selling stop between 755 and 915? Well, that's what happened. And then you can see people taking profit all along here. The selling stops. Where's the open? Let's put the open down here, right? 930 is right around there. Was there selling from 915 until 1105? Because that's what the program warned us about 4 days ago. And boy, it sure looks like it. And did the market rise from 1105 until 1250, like the program warned us about 4 days ago? Yeah. And then from 1250 until 130, if you're still trading after lunch, higher from 130 to 215, lower from 215 to 320. And now this one's not working out so well. So I like to look at it this way. What if we bought and sold in between the signals? Here's another way to test the veracity of the concept, right? No screen. Oh, hold on. So sorry. How about now? I'm getting used to the new GoToWebinar interface. They change it every once in a while, so I must have hit the share button instead of the draw button. So this is what I drew, basically. And I was looking for, did it fall from 725 to 755? Did it stop falling and maybe even go up a little from 755 until 915? Did it fall from 915 until 1105? Did it go up from 1105 to 1250? Down, up, and down, right? Because that's what the pattern or the play was supposed to be from 4 days ago's warning. And so what I was saying a second ago was, if we measure, let's say we sell from the open of 725 until the close of 755 was a 40-point move. If we bought from the open of 755 to the close of 915, it looks like we lost 2 3/4 points. If we sold from the open of 915 and bought at 1105, we made 52 points. If we bought from the open of 1105 to the close of 1250, we made 38 points. If we sold from the open of 1250 to 130, we made 28 points, so on and so forth, from the open to the close. And now this guy, we're underwater by the end of the day. What do you notice about this chart? How lucky would I have to be for this to happen 4 days after the screenshot? Pretty lucky, right? And so what we start to see is it didn't just happen today. It happened yesterday. All those dots are marking the times we were waiting for something to happen. It happened the day before. It happened the day before that, and the day before that. Every one of those white and blue dots are times that the program was warning us to look for moves up and down. Again, it's never going to be 100%, but it's more than half of the time. One of the charts that fascinates me in the market that I love, it's my all-time favorite. I'm in love with the NASDAQ futures market. I love, 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 love the NASDAQ. The speed of it, the pace of it. The NASDAQ would be a blonde lounge singer or a blonde EDM DJ that you walk in and you know you shouldn't. I'm not going to talk to her. And you do, and you wake up in an alley in Tijuana with a tuxedo on and you can't remember anything. That is the E-mini NASDAQ. But I digress. I love it. Can't get enough of it. When we come and look, these were the I kind of drifted off there for a while. I like the NASDAQ because I know if I'm right or if I'm wrong right away. And if you haven't figured out yet, I have a very low attention span. These were the times for the afternoon. Remember, these are the farthest away for wickedest market right here. These were posted on Monday for Thursday right here. And these signals are the farthest away from Monday. So they would be the hardest in my mind to predict. And yet, when we come here and we look at the afternoon movement, look at what happened on what I've been told for years is an impossible to predict market. Let's just pick the lowest hanging fruit, 150, 2 p.m. And Bill, do you see how it stops at a, I mean, just it's screaming up like a rocket. And then right here at 220, it says no mas. And that's the top of the mountain. Remember, that's a 4-day-old signal. How long is it going to go down for? Until 235. Until when? 246, 250. We get in this chop zone here where it doesn't really go anywhere. And then when the signals are close together, fun fact, that's usually where chop is going to occur. When the dots and the histogram lines are super close together. And then that consolidation breaks at 301. For how long? Until 317. For how long? Until 335. And then there's the 4 o'clock signal. So it's bananas to me because this chart was posted 4 days ago. And the only reason these signals exist for the NASDAQ on a 1-minute chart is because those patterns were repeating over and over and over again, thousands of historical bars. And our brains, our eyes, our minds are not hardwired to see this. They know this. And so we're sitting down at the slot machines at the right times of day, and we're pulling the handle just moments before they're likely to pay out. So here's what's cool about the software. If you haven't figured this part out yet, we know the times in the future. They're there for us like a bus schedule. So let me put the histogram back on here. Here's the 5-minute NASDAQ, right? If I pull this chart over to the left, you guys see I have the times for tomorrow right now. 6:50, 7:35, 8:20, 9 o'clock, 9:45, 10:35, 10:55, 12:30. I have the times right now. My favorite time frame is the 1-minute chart. I've gone as low as a 9-second, and I'll play around with the 30-second, but I like the 1 minute the best. Anything more than that kind of tests my patience. Right? So we can look at a 5-minute Bitcoin chart, and we can study these patterns and see when the moves are coming up next. But boy, I like a 1-minute chart. It takes a little longer to generate the signals because we're looking at 5 times as many historical bars. But when it comes back, oof, I love that. I love a good 1-minute chart. YM, yeah, sure. There is no market that we can't analyze. I think we had the time frame for the Dow was a 3-minute chart. Here's the 1-minute Lionel for this afternoon on the Dow. Here's the 1 minute for the morning session this morning. And I'll go over to the 3-minute, which was what we posted the signals for, just for accountability. So Lionel, here's what the program warned us about since Monday. And I always want to refer back to this because otherwise I could be guilty of curve fitting or just showing you the good stuff. And so, yeah, you see here where it says 924 until 1051 until 1230, where 924 was on here, and then 824 is before that. So Lionel, this is what holds me accountable to you. I have to show you that before I show you any other time frame, so you know there's no secret sauce underneath getting the best possible signals when you ask about other stuff. Does that make sense? I can't fake this part. So on my chart, Lionel, this is NinjaTrader. I have a 714 look back calendar days with a swing strength of 8. So if it's NinjaTrader with those 3 values, it has to match. If it's TradingView, they won't match. So for the purposes of demonstration, this is what the software told us to watch for on the Dow today. And again, it's not 100%, but it's way more than half, closer to 60, 70%. Any other questions about this while we're looking at it? It's pretty cool. I think it's pretty cool. And then most people are watching a 3 or a 5, those kind of higher time frames, right? So here's a 5-minute chart. I think this is where most people are kind of watching. But I don't have the software. You have to tell me a little bit more, Lionel. I'm not sure. Are you an existing customer or are you still? I'm not sure what you're saying. You don't have the software. You're not an owner. You are an owner. Give me a little bit more to work with. You have Warp for NinjaTrader. Where are we not lining up? While I'm waiting for that, I guess we're more pedestrian than you. I don't know. I don't think anybody's anything more than me. Okay. Yeah, well, these were the times out today, right? There they were, YM 3-minute. And Lionel, when I put those times on this chart, they match. That's what I just showed you, right? 924, 1230, 924, 1230. So everything matches. Yeah, pretty cool. So when you're using the software, there's 100 different ways to trade with the signals. Everybody trades differently. And there are 2 methods that I teach on the page that I just showed you. I want to just go over that real quick. And again, hold myself accountable. Otherwise, there's a temptation to make it look better than it is, right? So here it says, we'll be showing how the signals can be traded by using one of 2 simple entry rules called signal with trend or the puncture trade. Signal with trend or the puncture trade. And then there's a video that goes through it. I'll just review it with you really quick. Basically, what we're looking for are one of 2 things, very basic entries that are grounded in trend theory. So we're not going to trade every signal. We're not going to buy and sell at every single time. That would be crazy. What we're going to do is we're going to treat the trend line, like Ali mentioned earlier, the 120 EMA, as a filter. And so when mine's turning down, I have it specifically changing to blue to let me know to pay attention to the blue signals. Okay, so that's number 1. We're only going to look for signals in the direction of the trend, one of 2 different ways. And so the first way, if we get to a sell signal like the one at 9:45 today, my stop is a factor of the average true range, meaning if a 5-minute bar is 50 ticks lately, that's the average true range, right? The bars are getting bigger and smaller as the market speeds up and slows down. My stops are getting closer and farther away. If you've ever seen an indicator called super trend, it kind of works the same way. And you can see that your risk is more or less throughout the morning and the afternoon. So however big a 5-minute bar is, or a 1-minute bar, or a 3-minute bar, I put my stop that distance plus 50% more away. And so per the website and this very simple strategy, my stop is always 1.5 average true range values away from the trend entry. And these signals, Matthew, are called signals with trend. SWT is my shorthand for that. They're one of two, the signal with trend and the puncture. All right. So if I have my signal with trend, this is right after the open. And this isn't the right or wrong way to trade. There are more than 100. God, 17 years. We've got, I think, 6,000 customers now. Every one of them trades differently with it. I start out showing everyone a basic entry and exit method that shouldn't work, Matt. If these signals are 4 days old, should this work at all? Yes or no? Your gut tells you, no way, Jose. So what we want to do, per the rules on the web page, I'm going to enter on the close of the 9:45 candle, and I'm going to exit on the close of the 11:05 candle. Signal with trend. Basic iteration. I'm going to enter on the close of the 12:30 signal. I'm going to exit on the close of the 1:35 candle. I'm going to enter on the close of the pre-planned 225 signal. I'm going to exit on the close of the 320 signal. All right, so those are the three signals with trend. If you're going to trade after the close, you're presently up 136 ticks. So those are signals with trend. There's another signal called a puncture. And the way a puncture works, I think it's kind of cool. These signals are the counter trend signals. So when this candle closes, Matt, at 725, you see how we're below the moving average? This is not a trend is your friend thing. I would love to sell. I want to be a seller. I'm below the moving average, but I have this pesky behavior pattern here that's telling me, Michael, a lot of time in the last several thousand historical bars, the market goes up at 725. Matt, if I'm a trend seller, what am I hoping will happen at that 725 signal? I'm hoping JP Morgan, Credit Suisse, Deutsche Bank, Bank of America, Goldman Sachs change their minds. I'm hoping they withdraw their troops. I'm hoping they say, release the sales Kraken. And the only way I can really positively identify that is if they hit their own stop line. And if they puncture the stop of the behavior pattern. You understand? If this signal fails with trend, it's a potential trend entry. So what I do and what I teach on that webpage is I say, look, the second it comes underneath that dotted white line, I have a sell stop sitting there. The candle that drives through or punctures that line, I put my stop 2 ticks above that candle. There's my stop just above this candle. It went, pops the membrane of that stop, and it says, look, this bathtub, I'm pulling out the stop and the water's going down the drain. Some people call it an icebreaker. It's below a line that would be a failure for the buyers. And now how long do I hold it? Until the close of the next signal. That is a puncture. So that's an $87 move. Matt, if it came up and hit that stop, that would have been a 71 tick stop. Yeah, the lines are automatically generated. And so up here, you can see in the indicator section, it's called a volatility stop. I have mine set to 1.5 average true range. Some people have it set to 1. I don't recommend going under a 1. And if you want, you can have a fixed number of ticks. You can make it 50 ticks, 25 ticks, 10 ticks, fixed. I prefer a dynamic stop because after all these years, it seems to be a better way of approaching it. As markets speed up, the risk is higher, but the reward is greater and so on. So Matt, over here, it happened again. My entry is 2 ticks under this line, right? And then it punctures that line right there. That's the signal. My stop is 2 ticks over this. And how long do I hold it? Until the next signal. So it's basically a break-even trade, right? Yeah, you got it, Matt. So trend entries are the ones that our customers are generally most profitable using. And so the statistics of trend signals are generally somewhere around 50 to 55% expectancy with a 1.5 or greater risk reward when you trade with the trend. So you win about 50, 60% of the time, but you win $1.50 for every dollar that you lose. Does that make sense? And that's a great place to start. The reality is, though, it shouldn't have worked at all, right? That's the reality. None of this stuff should work as well as it has or what it's done. So, yeah, 100%. Let's take a look at gold futures. Down on a lower time frame, that's one that's moving pretty good now. A lot of volatility in the precious metals sector. So Matt, can you see how that signal with trend might apply at 205 and 320 this afternoon? These are the forecast times from the web page, right? Enter at 205, exit at 255, the $26 move. Enter at 320, exit at 430, $24 move. There's your puncture just below the white line, and so far the maximum favorable excursion dollars. So following with the trend, it's simpler for most people at first, and takes that need or expectation to be right all the time out of the loop. So these were the signals from yesterday, and you could sort of see we're buying yesterday and we're selling today. I like the approach. Yeah, for sure. And so Abayomi, the auto trader, I can get your email address. Let me see if I can find that. I can get your email address and have my guy reach out to you and do a demo on that one if you want. Let me have Paul get in touch with you on the automated version. So I'll have him get in touch with you on that. Because then you don't have to sit in front of the computer all day, right? But if you want to look at different time frames, if you're a multiple time frame trader, you can look at gold on a 60-minute chart, gold on a 4-hour chart, gold on a 5-minute chart, and wait for all those signals to line up. So here's gold on a 1-hour chart, and you can see the next signal is 9 o'clock tonight. And then the next signal afterwards is 5 o'clock on Sunday, 1700 on Sunday. So it's nice to be able to see what were the forecasts telling me last week, the week before, last month. What are the signals coming up for next week? And the only reason I'm using the version of Ninja before the upgrade. I have 8.1.5.2. I'm usually the very last person in the ecosystem to upgrade, Richard. So I have one back from most everybody. So it's nice to see when the signals are coming up in the future to look at what happened when we were paying attention in the past. So there's sort of accountability here telling us this is what we were expecting versus what actually happened. So now when we look over on the right side of the chart, we can see that that's the case. And there's a version of this for another platform. I don't want to do this. My trading view isn't loading up. There is a version of this for trading view. It's wanting me to update stuff, but I want you to see in the background that it's actually doing the same thing as the other stuff here. So I should have filled all this stuff in beforehand, but now it's asking me to do it now. So everything I'm showing you here, there's a version of it for trading view as well. So in a nutshell, we sort of have this golden ticket, if you will, that in every way, shape, and form is too good to be true. Here's the E-mini NASDAQ, and you can see that the buying signals when we were predicting with this tool were on October 23rd. They were on September 26th. None of these signals change after the fact, by the way. November 20th, December 17th, and then this is the very first buy signal, Matt, that hit its stop. You see that? So Matt, fun fact, when you see a failed signal like that, it's telling you that the institutions did not show up. When they don't show up and it's time to buy, pay very close attention to the next opposite signal. It's sort of like, are you guys familiar with who's the quarterback that they just had the roast on Comedy Central for? The guy who's handsome, he was with the Patriots and then he went to the other, won all the awards. What's the guy's, I forgot his name. Brady. So Brady likes to throw the ball, throw the ball, throw the ball, throw the ball. If you look and he passes it, you can almost assume there's something wrong with his shoulder. Why isn't he throwing the ball? Oh, he's going to pass it again. He's going to hand it off. He's going to run the ball. If this is a failed pass, he's probably going to run the ball. And you can see it here. Well, it should have done this, right, Matt? The NASDAQ should have broke out and went into all-time highs. And it went womp womp, hit its stop. Oh, there's nobody here. If it was a gymnasium and we're waiting for a gymnasium full of people, you'd go, hello, hello, hello. Are there any buyers in here, 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 here? There's no concert tonight. and then down until the next signal. And it'll be blood and guts, and Jim Cramer will say, "You gotta get out of tech stocks. It's blood in the streets, and I blame Sam Altman." Ah! And then they'll trip that stop, and it'll go boop, boop. The market rallied 48,000 points today, and we can't tell you why other than they had a plan. That's how I perceive markets now. That's how I read them and I look at them. So when I look at the news now, I almost assume that it's the opposite of what they're telling me. Look at it. Dow tumbles nearly 600 points. Call your broker. Get out. And every one of these things that I read, I think it's a lie. It's just a placed psychological operation that someone has put there to get all of these people in between to create liquidity for them. That's what I think. So at the end of the webinar, we're kind of forced again at the end of 17 years here to ask the question. We sent out the times. They were available for Wednesday and Thursday. In this case, we actually published them on Monday. And when we came back at the end of Wednesday and Thursday to see, did the software predict more than half of the time whether or not a market will go up or down at a certain time, I think the answer is yes. Right? Moreover, the signals on the daily chart for gold that I gave you 2 weeks ago, they worked. The signals that I gave you for NVIDIA, they worked. The signals that I gave you for Tesla did exactly within a day of the actual turn. And same thing for the NQ on a daily time frame for sure. So I'm as big a skeptic as anyone, but after nearly 20 years, I think we've really stumbled into something that works. But when we overlay a trading system on top, like I showed you earlier, that's really where the rubber meets the road. If we just put a very simple signal or a very simple setup with the signals, if we filter by trend, we have a known stop, a known target. Does it work? There's going to be losers. There's going to be winners. We need to know the statistics and backtest before we trade. Okay, I'm going to win 55% of the time. I'm going to make 150% of what I lose. I think the answer for that was yes, too. Right? And that's what we see. Bill, we primarily day trade everything. No, Wednesdays and Thursdays are what we used to do 20 years ago to prove the software works. The signals are available for the next 7 days right now. So Mondays, Tuesdays, Wednesdays, Thursdays, Fridays. Bitcoin is 24/7. I just do that as a lead up for the webinar. I'll need to make it exciting. And I don't want to give all the signals away because then no one will buy the program. We had a customer, his name was Sven, and he literally just watched the web page like Lionel's doing for 2 years. He just traded Wednesdays and Thursdays with the free signals for 2 years. And then he said, you know what, I've made enough money. I should probably get the software. It would be nice to trade Mondays and Fridays and Wednesdays. So that option is there. But a lot of people want to look at other things and trade during the day on different days of the week. There's no rhyme or reason to it other than it's nice to have before the webinar. Yeah. This is what I believe in my heart of hearts. I am thoroughly convinced beyond a doubt. I believe with all the honesty I can muster, that this is the truth of what markets are. And a lot of people waste a lot of time between A and Z trying everything else in between. And the end of it, the all of it is this is a casino. These guys don't go to jail. They get bailout after bailout after bailout. They screw everybody on the way up, and they get bailouts on the way back down, and they elect the next person, left side, right side, middle side, and you don't really have a chance. Yeah, you can hack away at it, and some of the other stuff works eventually, but most people don't make it and never score that goal. And so I love this slide, like Formula One. If you want to go waste a lot of money and lose most of the time, join an F1 team. And so we have the support. We have a Discord for our customers that we're meeting in. You pull that over here. So we have a Discord for customers who are sharing their signals with each other and sharing where they're getting in and getting out and supporting each other. That's available. We have a support team that answers questions. We have program liaisons that are working with programmers to make sure the software is stable and bug-free. We surround our customers with the best tech that we have, the best support that we have in the community. And I think that picture really exemplifies what I was trying to say there. And finally, this is kind of where I'm going to end. And this is what I believe. Lionel, don't try to learn before you get it. I get why you're going that way. There's a video library involved where I've spent 15 years figuring out the best things to teach and which videos to watch and in which succession. Oh, Gary, do me a favor, or what I'll do is I'll just I'll get an email address and I'll CC you right now. I'll get you in touch with Rachel and she'll get you the invite. Hold on one second. Thanks for telling me that. I'm sorry you don't have that yet. Compose. If you'll just forgive me one moment. I want to get Gary straight. Why won't it say compose? I don't want to try Gemini. No AI for me, thank you. Here, Rachel, please send Discord invite. Got it. Okay, Gary, you should be getting something from her probably tomorrow. Glenn, what was your question? Have you ever looked at the first 1.5 hours and the last 1.5 hours to see if those signals are more accurate than during the middle of the day? Personal experience, when we have a live training room, we call it the advanced room, ADV room, and I'm teaching next week. It's from 9 o'clock to 11 o'clock, and I'm generally done somewhere between 9:30 and 10:30. Anything after 10:30 is excruciating pain for me. So most of the time I hit my goal in that first hour of the day. I have found that I'm very comfortable between 2 and 3 o'clock as well. And these are Eastern time, by the way. But those two pockets for me are generally where I find the volatility is strongest. Bill, I'd say no more than 1 or 2 hours a day. You reach a saturation point. You reach a saturation point. So for me, from a trending perspective, if I have a sell signal, I want that signal to move. And so between 9:30 and 10:30, you have that kind of volatility. What I've also seen is that if between 9:30 and 10:30 you get those kinds of moves, generally after 11 o'clock is when it'll start to open back up. So I would say 75% of the time I get this in the first hour. And if I don't, I'll sit there and come back after 11, and then that happens. Does that make sense? Yeah, absolutely. There's so much support here. I think there's too much, but I'd rather have too much than not enough for people. So yeah, pretty cool. So the whole purpose of today is just to show you this is what we said would happen. This is what actually happened. And It's impossible to fake this. It's impossible to jerry-rig it. It's as transparent of a presentation as you're ever going to see. And we've designed it that way so that you can have confidence in it before you purchase it. If you don't think, after seeing what I just showed you, this is working and it's right for you, please do not purchase it. And stay skeptical. If I couldn't convince you here today by what you saw, no harm, no foul. It's not for everybody. Last question. Yeah, Richard, reach out to Rachel. Send her an email. Can AI take your 17 years of data and generate signatures that recur daily with even greater accuracy? Ah, now you're thinking. Now you're thinking like we think. So, Ali, imagine a future where we've already had those thoughts. And now we're able to look at all of the data and possibly pair it with an AI module, maybe this year, maybe next year, and do even more work with it with a large learning model. Look how accurate it was without the large learning model, though. How much more accurate can we get just shy of Bernie Madoff accuracy? You know what I mean? How much more accurate can we get just shy of insider trading? I don't know. Thank you for your time here today. I appreciate you hanging out with me. We just hit our wall at 5 o'clock. I'm a little over. Appreciate your patience with me. May the wind be at your back. May the sun shine on your handsome, beautiful faces. May the valleys lay low before you and the mountains. May the mountains lay low before you and the valleys rise up to meet you. I want this to be as easy as it can be for you. There's a community of people, of customers waiting to help you. There's a support staff ready here. We have experts. We have personal mentoring and training, live in the market training rooms. I teach it one week, and then a customer who uses it to make money teaches it the other week. I don't know, short of coming there and duct taping your wrist to my wrist and moving the mouse for you. There's an automated version of it which does the same thing. Might as well be me moving your wrist. And it's there. It's available for you. It's a tool. It's a resource. It's not the holy grail, but boy, it's close. I want success for you. I worked hard. I'm an engineer. This is what I do. I solve problems. I connect things that have no business being connected. I see patterns that most people don't see. That's what I'm good at. Man, I want to equip an army of you knucklehead nerd traders to go out there and steal millions back from these ludicrous institutions. Make a dent in BlackRock's earnings. Boy, what a legacy. I love you all. Thank you so much. I'll see you. I'm going to do a webinar next week, get back on schedule, and then we'll go back to the every other week. But if you have questions, please visit our website, backtothefuturetrading.com. We're also on social media, Back to the Future Trading, on YouTube, Back to the Future Trading, TikTok, Twitter, X. If you see a picture of me on X, please don't ask Grok to take my clothes off. You're not going to like it. It's not pretty, even with the AI. And we'll see you guys in a couple weeks from now. If you're considering purchasing, please climb on board. Waiting doesn't make it better. Most people self-destruct when they're very close to the thing they know they need to do. Just push past that instinct. This is a good gift for yourself. And with a near perfect Trustpilot rating, I think we have an excellent rating with traders. Every one of them owns the software. There's no fake reviews or paid reviews. Please read through those Trustpilot reviews and see if this wouldn't be a good fit for you. Take care, everybody. Have a great day. I'll see you soon. Bye-bye.